BHP announces a $20 billion underlying profit and looks ready to acquire more assets. The federal government introduces new caps for international students, and why the cost of living crisis is helping Coles. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 28th of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning is a big one, really. BHP appears to be on the hunt for acquisitions after posting a $14 billion or 20 billion Aussie dollar underlying profit for the 2024 financial year, but cutting dividends.
The result was slightly better than expected, and the big Australian share price jumped 1.3% yesterday. The bottom line, or net profit, what we're talking about previously is underlying profit, the net profit came in 39% lower at about $8 billion. That included several impairments, including the group's Australian nickel mines. It's the third year in a row where BHP's dividend has come in lower, with the dividend payout ratio at 54% of underlying earnings. That's low compared to the last few years. BHP is the world's biggest miner, and you're talking about it. The numbers are always huge. The company expects to spend about $10 billion this financial year on its Canadian Jansen Potash project. Last year, it paid almost $10 billion, that's Aussie dollars, for Oz Minerals, and last month, more than $3 billion buying Argentinian copper assets. It also failed to buy Anglo American after its $75 billion bid was knocked back. While BHP has its digger in many commodities. Do you have a digger in commodities? I don't know, I'm trying.
Oh, it's like, so what are you suggesting, like a finger in many pies?
Yeah, I was trying to get the equivalent. Yeah, digger in many commodities. There was a notable increase in copper earnings, for example. But really, it's iron ore that is the big money spinner. It provided 71% of underlying earnings this year.
So, Sean, as you mentioned, BHP's cut the dividend, meaning it has cash on hand. Where's it likely to spend it?
Well, iron ore is still a major focus, and the company is pushing ahead with its plans to grow iron ore exports from Western Australia to more than 300 million tonnes a year. But Chief Executive Mike Henry yesterday said the primary growth commodities for BHP are potash and copper. It's become much less enthusiastic about nickel and believes there'll be a multi-year oversupply of the commodity. Now, a few months back, it was talking up nickel. Now it's written down the value of its nickel mines. Analysts really expect copper to be the main game for BHP, particularly since it didn't get its hands on the Anglo American's copper assets. Capital spending on copper, for example, is much higher than it is on iron ore, notwithstanding iron ore right now provides about 71% of underlying earnings. Mr. Henry yesterday spoke about BHP's copper options in Australia and South America. In fact, he spoke a lot about copper, not a huge amount about iron ore. So that very much tells you where they're going to try and spend their money.
Yeah, indeed. Now, immediately after the show, stick around for a chat with Vandita Pant, who is the Chief Financial Officer of BHP. It is from the series of interviews that we're featuring from Ausbiz, Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. You can sign up at ausbiz.com.au. It is free, but this interview today is a great one because it does go into iron ore, but yes, there is this focus on copper as well, and also talking about kind of steel demand in China and what comes next after the failed bid for Anglo American. It's a really kind of wide-ranging, really interesting and quite frank conversation. I really enjoyed it, so stick around for that one.
I love the start of it, where Andrew Gagan asks Vandita Pant, what did iron ore bring to the party? What was her response? Oodles of cash. And off she went.
Yeah. And it just went from there. It was terrific. All right, local markets, how did they perform yesterday?
The S&P ASX 200 closed down 0.2% to 8,071 points, with the technology sub-index the worst performer, while the energy index was the best. The banks were lower, while the retailers were mixed, as is normal at the moment. Much of the action came on the back of profit results. Global engineering group Worley's share price rose 3% after reporting a higher profit last financial year. Infection prevention company Nanosonics jumped 23%. Following the release of its results, jewellery retailer Lovisa tumbled nearly 13% after a trading uptake disappointed investors despite higher net profit last financial year. Property services business Johns Lyng Group fell 27%, the worst of the top 200 yesterday, after a revenue decline in the last financial year. And buy now, pay later group Zipco announced cash earnings of $69 million last year. Transactions fell in Australia amid softer consumer spending and as it pulled back on lending to more risky borrowers, but turnover surged in the US where it has almost 4 million customers. However, its share price finished down 8%.
And what about international markets? Much going on?
Plenty going on, but, it's all about local profits at the moment. Gold prices rose yesterday amid bets of a September interest rate cut in the US. So spot gold actually hit $2,518 per ounce. That's actually not far off the record of $2,531 per ounce, which was hit last week. Iron ore futures rebounded. Good news there. Basically at their highest level in 2 weeks after data showed China's inventories of iron ore, which of course is used to make steel, continues to drop. Brent crude prices were flat and the Aussie dollar is buying just under 68 US cents.
And of course, today's Wednesday, newsletter day, Sean.
It is.
Any tips as to what's going to be featuring in the Fear and Greed newsletter today?
A little bit about BHP, I would say. A little bit about other stuff, Michael. Really interesting stuff. Actually, I do a little politics today, which I don't do a lot of politics, but yes.
It's always fascinating. And we have had a fantastic reaction to the Fear and Greed weekly newsletter out every Wednesday morning. It is kind of, the podcast is the news and the newsletter is the views. And so that's why I think it is really kind of connecting with people, because they get to hear what you think about stories. Head along to fearandgreed.com.au and sign up, pop your email address in and you'll get it when it comes out mid-morning. Sean, we'll be back in a moment with the rest of the day's business news. Sean, the Albanese government has cut international student numbers and will permit 270,000 new students next year.
Federal Education Minister Jason Clare announced the controversial cap on foreign student enrolments yesterday. Publicly funded universities will be allowed to enrol 145,000 new international students, about 15% more than last year, according to a report in The Australian. Vocational training colleges will only be given a quota of 95,000 new students. Non-university higher education providers can recruit 30,000 students. Mr. Clare said universities would be allowed 15% more international students than enrolled in 2019 before the pandemic, but numbers would be slashed by about 20% for vocational education and training providers. The total number of newly enrolled international students will be 7,000 less than in 2019, which of course was before the COVID-19 pandemic. So net, fewer international students next year.
Sean, huge rallies were held across the country yesterday in support of the CFMEU and against the government-appointed administrator of the union.
They were pretty amazing. Did you see the crowds? They were like tens of thousands of people across the country. Now, of course, the federal government last week passed a bill giving it powers to force the union, which has been dogged by allegations of widespread corruption and links to organised crime, into administration after securing a deal with the coalition. Tens of thousands of construction workers protested in Melbourne outside the Trades Hall Council building. Workers chanted "Here to Stay" in support of former CFMEU Victorian Secretary John Setka. In Sydney, an estimated 10,000 protesters marched on the state parliament. Protesters labelled the Albanese government as fascists, led by Albanese. Ousted CFMEU New South Wales Secretary Darren Greenfield attacked the ACTU Secretary Sally McManus, accusing her of treachery and selling the union out. In Queensland, thousands of workers walked off the job and gathered at Queen's Gardens Park. Offices near the park were locked down during the morning. And National Secretary of the CFMEU, Zack Smith, spoke in Canberra at a protest involving about 200 people. Now, speaking in Sydney, Prime Minister Anthony Albanese made it clear that he wasn't impressed with the protesters, particularly given that the action was unprotected. He warned that there would be consequences if people walked off the job as part of the CFMEU protests.
Now, Sean, this next one, I mentioned it at the top of the show. The cost of living crisis is helping Coles achieve higher sales and earnings. But within the supermarket, shoppers are really looking for bargains.
In fact, 90% of Coles shoppers are changing their purchasing habits and cheaper private label groceries are selling well. Now, interestingly, it's the top tier of the private label brands that are growing fastest. There's also a drop in red meat consumption, prompting a new phenomenon, which I'd never heard about until yesterday. It's called Meat-Free Monday. Would you be in that one, Michael?
No.
Yeah, good.
No, I don't. Unfortunately, part of the problem is I'm just not coordinated, not kind of organised enough to do it. Maybe I might end up doing a meat-free day, but Monday, I don't like to kind of restrict myself to just one day.
Fair enough.
Sorry, that was a very long-winded answer. So maybe is the answer, Sean. Maybe. How about you?
I don't really eat red meat, so yeah, definitely. No problems for me.
Oh, of course.
With the chips, things like that. Shoppers are also holding back on the booze, with sales at First Choice and Vintage Cellars liquor outlets continuing to struggle. Coles chief executive Leah Weckert said customers are eating more at home and favouring promotional products and loyalty programs. Inflation is easing, but it hasn't gone. Meat and bread prices have come down, as have prices for avocados and apples. But Michael, the cost of some fresh produce, such as bananas and tomatoes, have risen recently, and the price of chocolate is about to go up. Crisis?
I'm assuming you don't eat chocolate. You don't seem to like anything fun.
Chocolate, I have a real craving for. Sorry, chocolate, I eat far too much chocolate.
Okay, good. It's just nice to know that you have a vice, and now we've learned what it is.
I see a bar of chocolate, I think it like a plate of chips. You just got to eat the whole lot.
Yeah,
that's how I see
it's
it.
rude to leave anything left on the plate.
That's right. All this came out as part of Coles' full-year results released yesterday, where the number 2 supermarket chain lifted net profit by 2% to $1.1 billion on sales of nearly $44 billion. Coles also upped its dividend, and its share price closed nearly 2% higher.
Sean, Woodside Energy says it can pay strong, that's a quote, strong dividends, even as it increases spending on low-carbon energy projects and invests in developing new oil and gas fields.
The oil and gas producer announced an underlying profit of $1.6 billion for the 6 months to the end of June on sales of about $6 billion. The average price that Woodside received for its oil and gas fell 15% to about $63 a barrel. Shares in the oil and gas producer rose 4% after the earnings results, notwithstanding a cut in its dividend. Woodside Chief Executive Meg O'Neill said the company's delivering on its strategy to thrive through the energy transition while maintaining a disciplined capital management. She said Woodside's agreement last month to buy a clean ammonia project in Texas positions the company to be an early mover in the emerging lower carbon ammonia industry and makes a significant contribution to delivering the group's Scope 3 targets.
Int'l is fighting to maintain its standing as a responsible contractor to the US Navy after accepting a $24 million penalty as part of a plea deal to head off criminal prosecution by US regulators in a fraud investigation.
Yeah, this has been a great story for about a decade. The deal's a result of negotiations with the US Department of Justice and the Securities and Exchange Commission, whose investigations focused on alleged fraud between 2013 and 2016 within Int'l's US division. Now, according to a report in The Australian, the Perth-headquartered Int'l has been desperate to ensure any settlement was acceptable to its biggest customers, the US Navy and the Royal Australian Navy. Int'l is now in talks with the US Navy and seeking an associated administrative agreement that would set out compliance commitments, access, reporting obligations, introduce an independent monitor, just to make sure they can keep these contracts. Financing such an agreement is pretty much critical to Int'l maintaining its standing as a responsible contractor to the US government. Without that, it's ineligible to work for the US Navy and Coast Guard, and its business is in all sorts.
There were plenty of people watching this one, Sean. The first earnings result of Mexican-themed fast food chain Guzman y Gomez as an ASX-listed company came in about as expected, with same-store sales growth for the first 7 weeks of this fiscal year above expectations.
Co-Chief Executive Stephen Mark said there had been strong demand for value offerings, such as the $12 chicken mini meal, along with a rise in the breakfast category as more people headed to stores earlier in the day. The $8 breakfast burrito, for example, bacon, chicken, chorizo, scrambled eggs, hash browns, that's growing in popularity with customers such as tradies coming in to buy that one. According to a report in the Fin Review, the peak time for the group's drive-through outlets is 6 a.m. to 8 a.m. for the growing breakfast trade. Guzman's share price rose 3% yesterday. It's now about 70% or just shy of 70% higher than its listing price in June. When you look at Collins Foods, which owns KFC, Domino's, they've gone the other way. So it's really been, it's been a success story in terms of the share price. Investors love Guzman. It's still got a long ways to go to actually sort of fulfill the promise it shows, but it's just interesting how it's the real outlier in that sector.
Yeah, it certainly is. And one more, Sean, the Victorian government has announced a 7.5% levy on short-stay accommodation bookings, including bookings made through Airbnb and Stays. This comes into effect from January 1 next year.
Yeah, plenty of overseas jurisdictions do this. Victorian Treasurer Tim Pallas yesterday said the Short Stay Levy Bill 2024 will be introduced into Parliament this week. The tax is expected to raise $60 million a year, with revenue to go to Homes Victoria to support the building and maintenance of social and affordable housing. Now, homeowners leasing out their primary place of residence for a short stay, hotels, motels and caravan parks will all be exempt from the levy.
Turning to international news now, the near-term risk of a broader war in the Middle East has eased somewhat after Israel and Lebanon's Hezbollah exchanged fire without further escalation. But Iran still poses a significant danger as it weighs a strike on Israel. This is according to America's top general.
Air Force General C.Q. Brown, chairman of the Joint Chiefs of Staff, spoke to Reuters after emerging from a 3-day trip to the Middle East that saw him fly into Israel just hours after Hezbollah launched hundreds of rockets and drones at Israel, and Israel's military struck Lebanon to thwart a larger attack. It was one of the biggest clashes in more than 10 months of border warfare, but it also ended with limited damage in Israel and without immediate threats of more retaliation from either side. Brown agreed that the risk of a regional war had declined, but added the real unknown in all this is how Iran responds to those attacks over the weekend.
The share price of PDD Holdings, which is the parent of online retailer Temu, tumbled nearly 30% yesterday, Sean, cutting the wealth of founder Colin Huang by about $14 billion.
Yeah, that's US dollars. So think of it like 20 billion Aussie. It means Huang is now worth just 35 billion US dollars, according to the Bloomberg Billionaires Index. He's the fourth wealthiest person in China. His reign as the richest person lasted about 2 weeks. Now, anyone with teenagers in the house knows Temu, a marketplace for very low-cost items. My daughter often sends me promotions saying, if you sign up here, the person who sent it to me is going to get all this free stuff. So what do I do as a responsible parent? Sign up.
You do. You do. Of course
absolutely.
You do. That's fantastic.
Totally. Yeah. Now, Temu's parent PDD reported disappointing revenue for the June quarter. It considered its growth trajectory isn't sustainable, given the increased competition from players like Alibaba. Huang is interesting himself. He founded PDD in 2015 after launching a few gaming and e-commerce ventures. He used to work as a Google engineer. He quickly ascended the ranks of the world's richest people, with his net worth peaking at about $71.5 billion US dollars. That was early 2021. He stepped down as PDD's chief executive in 2020, left the board as chair in 2021 as Beijing began cracking down on China's tech giants. Sounds like a sensible life decision, that one.
Yeah, might be the case. Okay, up next is the Fear and Greed Daily interview with Vandita Pant, CFO of BHP.
All about BHP's 2024 fiscal year results. Great chat about iron ore and copper and all sorts of things.
Yeah, courtesy of our friends at AusBiz. You can sign up for AusBiz at ausbiz.com.au. It is, of course, entirely free. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you can sign up for our free weekly newsletter as well. Gosh, it's just a sign-up fest, isn't it, Sean?
It certainly is, Michael.
Indeed. Thank you very much.
Thanks, Michael.
It's Wednesday, the 28th of August, 2024. Make sure you're following the podcast. And please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.